Hey guys, welcome to the Max Invest YouTube channel. In today's video, we're going to be discussing Kogan Stock and its July business update. Of course, if you enjoyed the video, remember to like and subscribe to the channel, and remember nothing in this channel is financial advice, and you should always do your own research around these stocks. So let's get into what Kogan had to say in their July business update, and I can say their July business update was actually pretty good. Essentially, this year, a big milestone that Kogan managed to achieve was it got over 3 million customers. This is extremely good, as just 1 or 2 years ago, Kogan only had around 1 million customers, so to see Kogan's customers growing so rapidly is definitely a good sign. Now, of course, a lot of you probably haven't used Kogan before. Heaps of people have, however, there still are heaps of people in Australia who are yet to use Kogan. If you think of big business services like, say, Amazon, almost everyone in the entire world has used Amazon right now, and I do believe Kogan still has a lot of room to grow. Kogan can definitely go from 3 million users to 10 million users to 20 million users, and I do think this is going to be possible in the next decade. So I am very bullish on Kogan. I still do think there's a lot of room to move, and if they continue this growth in customers, it is going to be very good for Kogan on the long term. Now, in Kogan's July business update, they decided to give a few key metrics for growth. Since Kogan is an Australian stock, the financial year has just ended. The financial year ends at the end of June. So the July 2021 update is actually a very good way of checking some of the metrics at the end of financial year. How have these grown from 2020 to 2021 in the space of 1 year? And we can see gross sales grew by more than 52% above financial year 2020 numbers, and this reflects a compounding annual growth rate of 46% since 2019. So we can see gross sales growing by 52% is a huge number for Kogan, and it does show the business is still in an exponential growth stage right now. Moreover, revenue grew by 56%, gross profit grew by 60%, and all of these numbers reflect that Kogan is growing at a rapid rate. Kogan continues to grow, get more customers, and get more and more revenue, which they can pay out with in the form of dividends, and which they are currently doing. Now, one thing that hasn't fallen, but has not gone as well as it should have gone, is adjusted EBITDA. This grew by only 23% above financial year 2020. Now, 23% growth is actually extremely good. Most companies would be very, very happy with 23% growth, as it is quite good. However, we can see the other numbers for Kogan are above 50%, between 50% and 60%. So, why did they lack in adjusted EBITDA? Now, the main reason is because of a lot of muddle-ups and mix-ups over inventory. Kogan struggled to get the right inventory, how much inventory they needed, and this did weigh down on their total earnings overall, and it did result in adjusted EBITDA not going as well as they would have planned because of some very high inventory costs that they had to occur. Despite this, I'm still very bullish on Kogan, as all of these numbers look very good. I do think adjusted EBITDA will go back up to where it was previously, and even if it doesn't, 23% is still very strong growth from this high growth company. So overall, Kogan is doing very, very well. If we look at Kogan's total gross sales, we can see that Kogan just cracked over $1 billion worth of gross sales. Kogan actually had $1,097 million worth of gross sales, which is a huge number and a very good number. A lot of you may know, if you follow Kogan Stock or have Kogan Stock, that the Mighty Ape is a branch off Kogan Stock. The Mighty Ape is essentially the New Zealand version of Kogan. Basically, New Zealand had this company called Mighty Ape, which is just an online retail seller, and Kogan essentially went out and bought Mighty Ape, so now Kogan own Mighty Ape, and this is in the stock price as well, so you should know what's happening with Mighty Ape, and Mighty Ape continue to grow. They have about 800,000 users and $80 million in revenue, which is a substantial amount. As we can see, Mighty Ape and Kogan continue to grow across all metrics and they continue to do very, very well. So overall, the July business update for Kogan really reiterated my bullish thesis for the stock. They continue to grow at a rapid rate, and if Kogan can manage to grow at above 20% every single year for the next 10 years, they will be a Goliath company and significantly bigger than they are today. Even if Kogan grow at only 10%, and I do think Kogan will be growing above 10% for the next decade up until around 2030, so I am very bullish on Kogan and I can see a very bright future ahead for the company. So let's take a look at Kogan's overall chart and the trend of where Kogan has actually been going. And as we can see, despite a pretty big pullback that we have had in the past couple of months, Kogan tends to trend upwards. Kogan is sort of going upwards and doing these big cycles where it goes upwards slowly and comes slowly back down and continues to do the same thing over and over, which is a very interesting pattern that you don't see in too many stocks like Kogan. It's been very, very cyclical and it's been following a very similar pattern, which certainly is quite interesting. As we can see, since around October, Kogan actually had a local peak where it was around $25 per share. From high to low, Kogan dropped around 64%, and currently Kogan have dropped around 56% to this current price. So this is a huge drop from Kogan's highs, and it's important to unpack why this actually happened. Now, in my opinion, there are actually a few reasons why this happened, which are pretty clear. The first big reason was in around November, a lot of people were saying, hold on, we're getting vaccines, people will go outside, people are going to be buying items in shops. Of course, if more and more people buy items in real life and not off their computer, less people would be using Kogan hypothetically, and this would reduce the revenue for Kogan. So, in my opinion, a lot of investors actually expected this and they sold off the stock as a result. Another reason for this was because the stock did go very high up and had a huge rise. So of course a lot of investors were in a lot of profit, and it does make sense to take some profit when you are in a significant amount of profit. So I do think this was another factor. The next big factor was definitely Kogan's higher inventory costs. Kogan didn't really know how much demand they were going to experience and how much inventory they needed, and this did hurt their EBITDA a little bit. However, I do think this is just a product of Kogan's demand being so high that they don't really quite know what to do, which is a bullish sign that Kogan has very high demand. So, overall, I do think a lot of these suspicions that investors had resulted in the price dropping. However, I tend to think quite differently than these investors. This time last year, essentially, we were in a lockdown. This time last year, we were in a full-on lockdown. Everyone was inside, and it was the peak of everyone going and buying e-commerce online. However, despite that, over the course of 1 year, Kogan have managed to grow revenue by 56%. This shows that despite everyone being out of lockdowns, e-commerce continues to grow, and I really do think e-commerce is the trend of the future. Sure, COVID could have spearheaded some of that growth, however, I do think e-commerce is definitely going to continue and continue into the future. Moreover, I don't think the high inventory costs are anything to worry about. I do think this is a short-term problem and a product of Kogan's high demand, so overall I remain very, very bullish on Kogan despite this huge dip in price. Even if we go back historically, we can see that Kogan was up above around $10 a share and dipped back to $2.73 per share. However, despite this, Kogan continued to trend upwards over the long term, and I do think Kogan is going to continue to trend upwards over the long term. Another thing that I do want to point out is all the way back in 2018, Kogan was trading at around $10 a share. Right now, Kogan is trading at around $11 per share. Now, Kogan is a lot better than it was 2 years ago. People did not expect the e-commerce boom that we would have, and a lot of people doubted Kogan back then. However, since this time period, Kogan have doubled their revenue, doubled their sales, and they've essentially doubled by every single metric and even more than doubled. Despite this, Kogan is trading around at the same price. This does show a little bit of an inefficient market in my opinion, and I do want to capitalize on this opportunity, and I definitely definitely like stacking Kogan Stock, as I do think it is going to be one of the best performing companies that there is, especially at these low prices. Anyway, if you enjoyed the video, remember to like and subscribe to the channel, and remember you can comment anything below and I will get back to all of the comments. Thanks for watching the video.